Welcome back. Let's talk to Jeremy Stretch. He's the head of G10 FX for CIBC. Morning to you, Jeremy.
Good morning, mate.
Right, let's talk about the Great British Pound. Is it great, buy, sell or hold?
Well, it is proving to be remarkably resilient. I think that's the first thing I would say, because it continues to oscillate north of 132 in the current environment and nearer 133. It'll be fascinating to see what the policymakers from the MPC are going to underline in their current testimonies, because I think certainly there are a couple of those MPC members who are quite vociferous in terms of the need for a little additional action. But I think in the context of the political and stroke macroeconomic dynamics, I think there are still far more headwinds than tailwinds for sterling in the short term. Now, of course, we're looking towards that upcoming EU Leaders Summit in mid-December.
Yep.
If there isn't going to be any movement on discussions on a trade and a transitional deal, then I think that does leave sterling a little bit vulnerable. Now, it may be the case that the UK can do enough to at least get the European Union to discuss trade on the basis of the financial obligations. But I think the issue of the island of Ireland does look to be an increasingly intractable issue, at least in the short term. And so I think there is a risk that trade and transitional deal gets kicked into 2018. When you overlay that with the political risks in Germany, I think that underlines the fact that the UK is up against it in terms of the time-sensitive Brexit negotiation. So accordingly, I think sterling rallies are worth selling into.
So we'd sell the rallies. Okay, how low could it go in 2018?
Well, I think it really depends on the probability that you price in of that worst case scenario of a cliff edge exit. So I think if we do start to see that materially moving up the agenda, and if we don't see the trade deal on the table in December, then I think that probability does increase materially. I think we will see sterling underperform against the dollar next year, but I don't think we're going to see the capitulation back to 120. I think we're going to be looking the upper 120s in terms of the dollar, because I don't think necessarily the dollar is going to get a particularly strong tailwind. I think if you are going to play sterling weakness, it's probably better to play that against the euro. So I think we can easily see euro sterling back at 94, 95 in the middle part of next year, or maybe looking at some of the other crosses. So if you're looking for a risk-off type scenario, looking at sterling yen. But ultimately, I think euro sterling is probably the better way to play it.
And basically from the short side?
Well, in terms of short side from the sterling, so yes, I think euro sterling does go higher. So I think ultimately it's probably going to be good news for UK exporters, but the news has to be kept in context.
Jeremy, brilliant stuff. Thank you very much.
Thanks very much.